What's going on, everyone? It is Chasen J Miles here again with another segment of Millennial Movers, part of the Millennial Movement, and I'm so excited that you're here today. Hope you got a chance to tune into last week's episode where we were just talking about when is the right time to purchase a home. Well, this week we're going to get into the money stuff. So I know that that's really important to everyone, and everyone wants to know all about the money. So we're going to talk a bit about mortgages. So starting off this week, we're going to talk about actually FHA loans. Now, FHA is just one of the types of mortgages that you can get. There are a few different mortgage programs out there, but today we're just going to focus on one of them. And I actually have one of my lender partners here to speak along with me. His name is Dan, and he's with a company here in Dallas called Movement Mortgage. And so everyone say hello. Welcome, Dan.
Hey,
How's it going?
Jason. I'm good. How are you, man? Appreciate you
Doing
having me.
Absolutely, absolutely. Just so glad that you took time out of your day to speak to everyone. I've been working with Dan for a bit now, and I'm very pleased with the service that him and his company provides. And so I really wanted him to come on here and actually talk more about mortgages and about FHA loans with you all. So Dan is a loan officer. And Dan, can you just kind of tell everybody what a loan officer does or what you do?
Yeah. As you said, I'm a loan officer, so you have to be licensed to be a loan officer. Go through financial background check, criminal background check. You need to, hold yourself to high standards. And then, once you get your licensing, now you can originate loans for people shopping for mortgages. I take an application. I check out everything, structure it out. If it's a good file, I get all your documents necessary. I set everything up. I talk you through it. I analyze credit, make sure that's all within the requirements and the guidelines for whatever program you're looking for. I get you into the bank and, get your note, get you the best deal, and we'll close you out fast. Simple as that. I just break it down, like to be very transparent and clear with, all my work. So that way all my clients and your borrowers, know what's going on throughout the process. It's good to be informed,
Perfect. Yeah, thank you. So for those of you that don't know the role of a loan officer, basically, if you're not looking to pay cash for a property and you're looking to get a mortgage, you're going to be speaking with a loan officer, whether it's at a smaller firm or a larger firm. You probably see ads out there that talk about mortgages. Fill out an application here, check your credit here, how much can you qualify for? Well, loan officers are the ones that basically take those applications and analyze everything. And they're the ones that you work with more so on the mortgage side and on the money side. So they have a very important role in every single real estate transactions, which is why I make sure that I work with the best of the best to make sure that my borrowers and my purchasers, whether they be millennials or not millennials, have the best deal, the best service, the best terms, and all that good stuff. So I'm not going to ramble on anymore about that, but today we are here to talk about FHA loans. So Dan, can you tell everybody what an FHA loan is?
Yeah, so an FHA loan is from the Federal Housing Administration. Basically, it's a loan that's insured by the federal government. It's in order to reduce the risk of a loss to the lender that if a borrower would default on his mortgage payment. It's made to be an affordable alternative option. Created a while back by the government to get people into their new homes. It has less stringent lending requirements, has lower down payment requirements, and it's just, a little bit more of an easier loan to do. It's good for first-time home buyers and great for someone looking to keep cash on hand.
Awesome, awesome. So what are the actual qualifications for an FHA loan?
Well, for an FHA loan, again, it's a little less stringent than your standard conventional loan or obviously a jumbo product, anything like that. A direct lender can go right down to the government guidelines because the government sets forth what is needed to require for the FHA loan. Credit-wise, you need to have a 580 credit score. Anyone that tells you need to have something higher, that's called an overlay. It's from an investor that actually sells the note. It's something they do just to create less risk. And down payment-wise, you need to have 3.5% down. So, for example, $3,500 on your $100,000 purchase price. And then the only other real thing that comes into it is your assets and your debt to income ratio. Debt to income ratio needs to be no less than or no higher than a 57% on the back end housing ratio.
Okay. So debt to income, I take it that means the amount of debt that we have versus, I guess, the amount of income that we make. I know something for a lot of borrowers is student loans and everything. So if you can just expand a little bit more on debt to income ratio and what that means, and do student loans even count in that?
Yeah. So your debt to income ratio is going to be your mathematical equation of your monthly obligated debt, and any other liabilities, child support or alimony, anything like that, divided by your gross monthly income. So I say gross, so it's pre-tax. So it's going to be your $1,400, not your $1,100 after tax that you net. And that's divided by all your debts. Now, student loans, they do come into effect. I recommend getting an income-based student loan program if you're looking to qualify for a house. Reason being because it typically would be less payment. So if you only have a $25 or $50 payment a month, that's going to give you a lot more room in that ratio than if you're paying $300, $400 a month in student loans. And if your student loans are deferred, a lot of borrowers come to me with that and say, well, they're deferred, I'm not actually paying on them. It was just a new guideline put into place. Any deferred loans, I need to take 2% of the total loan balance as a monthly calculation, which in most cases they can still work out. It really just depends on the borrower and how much income they're coming, how much debt. You're just going to want to talk to me about figuring out what it is. Pull your credit and all your debts come through that. And again, only child support, alimony, really the only other things on there. It doesn't count your utility bills or anything like that. So, but just talk to your loan officer. He'll give you the ratios and break it down more if you need. But it's simple, just your debt divided by your income, and it needs to be less than 57%.
Okay, so like you said, the best way to figure that number out is actually going to be to speak to someone like you.
Mm-hmm.
Yeah, y'all. Yeah, I definitely would recommend that you sit there and try to figure out these equations and figure out all of that stuff. There's systems that these guys use, and so it's super easy on our end. We can just send them the information and they can run everything and analyze it and let you know where you stand. And that's a lot easier and a lot quicker than, us sitting here figuring out those calculations. Wouldn't you agree, Dan?
Yeah, definitely. I mean, you're going to want to remember every loan officer wants to earn your business. So any good loan officer, doesn't get paid until it's a completed file. So, just let us do the work. That's what we're here to do. We're here to work for you, make it easy for you. So that way you can go out, you can pick a home, with someone like yourself as the real estate agent. You don't have to worry about the financing. Just have a good loan officer that tells you everything, how they're doing it. And I have no problem doing that for people and, running what if scenarios. Just giving people a good idea. It's just important to get someone that'll inform you as to what's actually going on and will work and earn your business.
Okay, so back to FHA loans. I believe you said that the minimum down is 3.5%, correct?
Yeah, that's correct. 3.5% of your own funds or sourced funds. So if you have cash laying around, it's not going to work. It's just because it's the government. They want all money needs to be sourced and verified. And the money can come from a gift. A gift can come from a friend, family, relative. It just, again, needs to be sourced. You can't just have 20 grand in your sock savings and slap that down for a down payment. They're not going to, no underwriter's going to accept that. It's just the way, 2007, 2008 happened, the housing market. Everything needs to be sourced and verified now. So 3.5%, that's all that's necessary. And as long as it's verified, good to go. And
source just means it needs to be in a bank account and you need to be able to trace where the money's coming from and where it's going and all that good stuff, right?
Yeah, and if it's if it's been in the bank for a while, then it's in there, and you've demonstrated the ability to save it. You just can't slap it in right before you go to buy a house and expect to use that as a down payment. No underwriter is going to accept that.
Okay, so I mean, what do you personally think of FHA loans?
I think FHA loans are great. I think it's a really, really good, cheap alternative to get into that new home. A lot of times, especially with millennials, where it's very important for us to keep cash on hand in case something pops up. It's a big transition in your life. You want to be able to actually furnish that home and actually live in the new home. So, instead of draining the bank account, slapping down 10% or 20%, you put down 3.5% and you have some money to buy furniture or just to have in reserves in case that everyone worries about the first time something will pop up. You're getting good houses, so nothing's going to pop up. But just in case something does, you have that liquid cash there. And otherwise, I mean, it's just more lenient. If you've had financial struggles in the past, you're not going to qualify for a conventional loan right off the bat. You need to show some establishment of, building that credit and building that saving history. And FHA is more lenient, so you're more likely to qualify for that than any other mortgage. And it just being cheap. I mean, there's not a better thing for someone that's just trying to get into a home and build equity. And you can always refinance out. If your scores aren't better, that mortgage payment's going to hit your credit. It's going to help out. You get yourself in a better position financially, and you can always refinance it into a different product. You can, you sell and get upgrade. Just in the DFW market though, where we're at, I mean, houses are appreciating at 15%. You're breaking even on your investment in just over a year. So in my opinion, there's no reason not to use an FHA loan if you're trying to move into a new home, unless you have the financial capabilities to do something crazier. But FHA is great. I personally love it. I don't see very much downside to it.
Awesome. Well, there you have it, everybody. So that's the FHA loan. Now, in the next coming weeks, we're going to actually be speaking more so about conventional. I know Dan just said the word conventional, so that's a different type of loan program that we will cover next week. And then there's also VA and USDA loans, which are other loan programs that are out there. And so we're going to be covering all those so that you can get a better understanding of the different loan options that are out there for a mortgage. But today we just wanted to cover FHA. And so I hope that you were able to get some good information from that. As always, tweet me your questions. I'm on Twitter at ChastenJMiles, and just use hashtag Millennial Movers with any questions for your questions to be featured on here. Some of you have taken the time to reach out to me and send me questions on Twitter, and I've received emails and I've replied back to you. So thank you for that. And if you have any questions or you want me to put you in contact with Dan so that he can look over your information, just shoot me an email, cmiles@chastenjmiles.com, and I'll be sure to get his information over to you. Dan, any last words?
Hey, use Chasten J Miles as your realtor. He's one of the best in DFW. He's great, and he's great for millennials. He knows the market. He knows what people need. I'm going to use him as my own realtor myself, everybody. So come on. Why not?
Awesome. Well, thank you. I appreciate you for being here today. I appreciate your time. And again, you all, tune in next week so that we're going to talk about conventional loans so that you can have a clear understanding of all the loans that are out there. And thank you for supporting Millennial Movers. And I will be speaking with you soon. Have a good day.
Thanks, Jason.